Hello, everyone. Through our last two lessons, we have unveiled the mystery of digital currencies, learning about their origins and core definition, a digital form of value that relies on cryptography and distributed ledger technologies. We now know they possess revolutionary features such as decentralization, programmability, and global circulation. Now, we're going to embark on an exploration of the family of digital currencies. Just as biologists classify species to understand the natural world, making sense of the diverse ecosystem of digital currencies requires us to grasp the scientific classification dimensions. Today, we will approach this from three core perspectives and map out the complete family tree of digital currencies. Learning objectives for this lesson. 1. Understand the basic dimensions of digital currency classification and their importance. 2. Master the three core classification methods: by issuer, by value peg, and by technological architecture. 3. Be able to identify the key features, representatives, advantages, and disadvantages of different types of digital currencies. Let's begin with core dimension 1, classification by issuer, authority attribution. This is the most fundamental and critical classification criterion, as it directly determines the source of monetary credibility and its legal status. 1. Private digital currencies. 1. Issuers, private institutions, organizations, or open source communities. 2. Credit backing. They are not backed by sovereign credit. Their value relies on technological security, market supply and demand, community consensus, or reserve assets. Representatives and subclasses. 1. Cryptocurrencies, such as Bitcoin, BTC, Ethereum, ETH, and Litecoin, LTC. Features. They are typically highly decentralized, subject to strong price volatility and algorithmically issued, e.g., through mining. 2. Stablecoins, such as Tether, USDT. Features. They are pegged to specific assets to maintain relative price stability, aiming to function as a more effective medium of exchange and store of value. 3. Platform tokens or ecosystem tokens, such as Binance Coin, BNB, and Uniswap Uni. Features. They are issued by specific exchanges or DeFi protocols, primarily used to offset transaction fees, participate in governance, and access platform benefits. 2. Central Bank Digital Currency, CBDC. 1. Issuers, national central banks, e.g., the People's Bank of China, the Federal Reserve, the European Central Bank, etc. 2. Credit backing. This type of currency is backed by sovereign credit, representing the digital form of fiat money, e.g., RMB, USD, Euro. With legal tender status, they must be accepted for domestic payments. 3. Nature. This is not a new type of currency, but a digital substitute or supplement to cash. 4. Core objectives. To safeguard monetary sovereignty and financial stability in response to the challenge of private digital currencies. To improve payment efficiency, especially cross-border payments, and reduce cash management costs. To enhance financial inclusion, serving the unbanked population. To strengthen the effectiveness of monetary policy transmission and improve anti-money laundering, AML, and counterterrorism financing, CTF, capabilities. 5. Technological models diverse. The blockchain or distributed ledger technology, DLT, may be adopted, but permission chains are more often used. Enhanced centralized database technologies may also be adopted. Key point: technology serves policy objectives, with central bank control at the core. 6. Representatives. China's ECNY. It is globally leading and is already used in large-scale pilot programs. The European Union's digital euro, Sweden's e-krona, the Bahamas sand dollar, etc. Let's proceed with core dimension 2, classification by value peg stability. The stability of currency value is crucial as it directly determines its effectiveness as a medium of exchange and a store of value. 1. Non-pegged or asset-free currencies, volatile cryptocurrencies. Representatives: Bitcoin, BTC, Ethereum, ETH, and most early cryptocurrencies. Features: value is entirely determined by market supply and demand, without backing from physical assets or fiat currencies. They are highly volatile, subject to dramatic fluctuations influenced by market sentiment, regulatory news, technological developments, and major customers' operations. Scarcity design, e.g., BTC's fixed supply of 21 million coins, is one of their value propositions, similar to digital gold. Applicability: they are primarily regarded as high-risk investment/speculative assets or for niche payment scenarios, not suitable as a unit of account for daily transactions. 2. Pegged currencies, stablecoins. Objective: to address the extreme volatility of cryptocurrencies by maintaining stable value, functioning as the stable currency within the crypto ecosystem. Main pegging methods: fiat collateralized, crypto collateralized, and algorithmic. Significance: they serve as a bridge between the fiat world and the crypto world and act as foundational liquidity instruments for the DeFi ecosystem. Next, let's proceed to learn core dimension 3, classification by technical architecture and core functions, capabilities, and use cases. The design goals and technological implementation of a digital currency determine what it can actually do. 1. Payment/value transfer-oriented currencies. One core objective: to serve as an efficient, low-cost, and secure payment instrument. 2. Technical features: they are typically designed to be simple and efficient, focusing on transaction speed and low fees. 3. Representatives. 1. Bitcoin. BTC was initially envisioned as peer-to-peer electronic cash. Although scalability issues, slow speed, and volatile fees have limited its payment function, it remains the benchmark for value storage and transfer. 2. Litecoin, LTC, and Bitcoin Cash, BCH. They are improved versions of Bitcoin, aiming for faster transactions and lower costs, with stronger orientation toward payment use cases. 3. Ripple. XRP. It primarily serves financial institutions for cross-border payments and settlements, emphasizing speed and low cost. 4. Many CBDCs, e.g., China's digital renminbi. One of their core objectives is to provide an efficient and convenient retail payment tool. 2. Platform or smart contract-oriented currencies. 1. Core objective: to provide a programmable blockchain platform that supports the development of decentralized applications. 2. Technical core: smart contract, a code that automatically executes predefined contractual terms. 3. Representative. Ethereum, ETH. It is revolutionary for introducing smart contracts. 4. Extended functions. Use cases go far beyond payments, including paying network transaction fees (gas), participating in governance voting (DAO), serving as collateral or liquidity in DeFi lending or trading, purchasing NFTs, and participating in games. 3. Privacy-enhanced currencies. 1. Core objective: to provide stronger anonymity and privacy protection in transactions, going beyond Bitcoin's pseudonymity. 2. Technical features: advanced cryptographic methods such as zero-knowledge proofs, ring signatures, and confidential transactions are adopted. 3. Representatives. Monero, XMR, Dash, etc. 4. Controversy. They're welcomed by privacy-conscious users, but subject to tighter regulatory scrutiny. It is important to note that, in practice, Digital currencies often exhibit characteristics across multiple dimensions. 1. Ethereum ET, a privately issued, non-pegged platform or smart contract-oriented digital currency. 2. Tether USDT, a privately issued, fiat-collateralized stablecoin, primarily used as a payment/value transfer tool. 3. Digital renminbi ECNY, a central bank-issued, fiat-pegged, highly stable, payment or value transfer-oriented digital currency. Through today's exploration, we have built a three-dimensional map for understanding the world of digital currencies. Who issues them? What are they worth? What can they do? By mastering this classification framework, we can quickly identify the attributes of any newly emerging digital currency, understand its objectives, and evaluate its risks and opportunities. Well, our journey of exploring the family of digital currencies comes to an end for today. We have drawn the family tree of digital currencies, examining them from the perspectives of issuer, value peg, and technical function, and we can systematically understand this seemingly complex world. Now, you should have a clearer view that digital currency is not a monolith, but rather a diverse ecosystem with many forms and functions. Finally, please complete the following exercises. That's the end of today's lesson. See you next time.